All right, welcome everybody to another episode of CRL Chart Request Live, the show where you provide the request, we provide the charts. I am Spencer Israel. That's JC Perez. JC, happy Halloween, sir.
Happy Halloween to you, my friend. New, fresh monthly candlesticks this evening. Very excited. So, little set of charts, champagne, candy. Beautiful.
What could be better than charts, champagne, candy, and monthly candlesticks? I
Who
don't.
doesn't
I don't
like
know.
candy corn? I don't understand who doesn't like candy corn. Why does candy corn get hated on so much?
I've actually never met a person that likes candy corn until I met you.
Wow.
So,
Wow. There's so much candy corn everywhere you go. Wait, they just make so much because nobody eats it? Come on.
I've wondered this all my life, and now I know.
Supply and demand, baby. Supply and demand. There's more demand than supply, clearly.
All right, let's go to the chart. If you have a request, you can drop it in the chat or do what the smart people did. They emailed us their requests already. Questions at stockmarketmedia.com. We do go through the requests in the email first before we go to the requests in the chat. So we'll start with the email. Let's start with Tesla. This one is from Daniel. He's asking about Tesla, which, I don't know, doesn't look amazing. It's looking better, right?
I mean, listen, this thing was an absolute monster. This is probably one of the best trades I've ever put on in my entire life on this rally at the beginning of this year. The short exposure to these growth names in general. We good? Are we good? Check my device.
Yeah, we're good.
Are we good? We're all set? We're all set?
Yeah.
Okay, cool. Just getting a little mad. Cool. So the consolidation that we saw. Are we good? Can you guys?
I hear you and I see you.
All right, perfect. Sorry. So the consolidation that we're seeing comes after one of the biggest rippers of all time, and the short squeeze. I mean, this was the short squeeze that we saw in the first 6 months of the year in technology and things like that, and growth in general. Tesla was one of the biggest winners out of that whole thing. And I mean, when you talk about market capitalization, what did it do? Did it add $500 billion? Is that not enough? Are you not entertained? Is that not enough for you, Spencer? Right now it's 630 billion. So yeah, it added about $400 billion in market capitalization in 6 months. Yeah, let it breathe. And, you know, it's really interesting when you look back and you look at the price of Bitcoin, which is why, you know, when you're like, JC, let's start with Tesla. I was like, all right, let's start with Tesla. But if we're going to start with Tesla, let's talk about what else is happening. And, you know, maybe Bitcoin and Tesla have nothing to do with each other. Maybe, oh, JC, one has nothing to do with the other. Yeah, maybe. But they move together, which is really the only thing I'm interested in. Maybe they have nothing to do with each other. Maybe they have everything. Maybe you're not smart enough, or I'm not smart enough to know why they're moving together. Maybe we'll find out in the future. Maybe the correlation changes. But right now, that correlation is in place. We've been following it for quite some time, and we have found it very helpful. So I don't think that the new 52-week highs in Bitcoin is a negative for Tesla. I think that is anticipatory of Tesla, and just understand how far we've come. We should just remind everybody we have a monthly candles tonight. So let's just put things in perspective. Spencer was just telling me offline the Tesla mostly doesn't do anything. I would argue if it does anything, it goes from the lower left to the upper right. That's for damn sure, right?
I think like so. Okay, so 2013 was a huge year. I think Tesla was up 340% that year. And obviously, you know, 2017 was good. 2020 was off the charts, ridiculous. 21 as well. And I know I'm just cherry picking here, but my point was, more often than not, I mean, Tesla, yes, it is an outperformer, right? It is an outperformer, no doubt about that. It goes up more than the S&P. But, you know, a couple of outliers notwithstanding, it's more or less a range-bound stock is kind of sort of the point I was making.
Yeah, it follows these Fibonacci extensions really well. It's one of the reasons we got involved back here when it got above that 187. You know, the 120 level was a big one. I remember when it got above 120, we're like, listen, if it's above 120, you got to be long. It's a big Fibonacci extension level, right? This goes back all the way to the correction that started in 14 down to the lows in 16. The market has really respected these levels time and time again. This time was no different. It really provided us with a great entry point. Like I remember, like even my own colleagues were just really upset, like, oh, no trend following, da 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 da. And I'm like, yeah, trend following and everything. But when trends change and you get bounces, and this is a perfectly logical level for one up being a great trade. Now the big level here remains is 300. So if we're at that 300 level, and it looks like we're right towards the lower end of the range. So right now we're in that 190 to 300 level. I think you could stay long Tesla if we're above 190 in general. Right here we are at 200. Just understand you got overhead supply at 300, so we want to be fading that level at least temporarily. That's how I look at that.
What's funny about Tesla, and it's also just a sort of an indictment of using the calendar to as just the arbiter of returns, right? You look year to date, right? And Tesla's up like 60% this year, something like that. But it's flat since February. So all those gains happened in January, right?
It had already started some. You started already seeing some relative strength coming in there in the fourth quarter, not just in Tesla, but in some of the others. But yes, essentially, the squeeze happened in January. Right. Not just in Tesla, but in things like Carvana, all those super heavily shorted names. They got squeezed. Those perma-bear ETFs are blowing up,
Yep. All right, we'll move on here. Let's talk about John Deere. This is for Hanson. I did write this down for you last week, Hanson. I know we didn't do a show on Thursday, so it was on my list already. DE, Industrial.
This is John Deere. Yep. So look at this long-term trend. Just look at that long-term trend in John Deere. I mean, it's really, really impressive, right? Just to kind of put things in perspective, we are looking at an industrial stock. It's like farming and equipment, machinery. It is, hold on.
What's interesting about this chart? It looks like it got back to its pre-financial crisis highs relatively quickly, right?
Oh, yeah.
Fast, right? But then it took another, 7, 8, 9 years for it to actually break through that level.
That's right. And then it finally broke out in 2016, which was just
when you
see a stock breaking out of a base like this, I mean, I remember being so bullish. This is right before the Trump election. You're getting breakouts to new all-time highs in Deere. Like, that's not a bad thing, right? So this is a $105 billion company, industrial, farm and heavy construction machinery. See who's better? Come on, who's better than me?
And just to clarify, Hanson is looking to maybe short this thing. That's the context of the question.
I mean, listen, it's a range bound stock. So let's remember what this is. So what Hanson's probably wondering is that if this is kind of like a major, like a big top here, right? Kind of like a big top. That's the bearish. That's the bear call here, right? The bull call here would be to turn that frown upside down, Spencer, right? This would be the bull case, right? So, here we are right around 365 at the end of the day. We're just right in the middle of this range, like literally right in the middle of this range. So you could be bearish, you could be bullish, but whether you're bearish or bullish, you can agree that we're right in the middle of that range. So, do you look at the glass half full or do you look at the glass half empty? If you want to kind of bring it a more way to the evidence approach, sort of to it, you could look at industrials in general, and you could see industrials in general, looking very similar to that John Deere, where it could be a top or a bottom. You're looking for a breakout above those former highs in industrials. You're looking for a breakout above these former highs in John Deere. And at the end of the day, both of these are stuck in the middle of their ranges. I mean, that's just what it is. It's a function of the market. I don't know if you haven't been paying attention, but the market has been very much range bound for some time. When you zoom out, not just industrials, but look at technology and semiconductors, right? Look at home builders, right? Still all in this massive multi-year range. John Deere, a bellwether of the space, no question, is no different, right? Same old story that we're seeing over and over and over again right now.
Yeah. All right. Keisha wanted to look at XLE, which is the second worst. Oh, now it's the worst. Whatever. Tied for worst performer of all the sectors today. It's up, but it's lagging.
Yeah, I mean, what's really interesting is that as massive of a run that we've seen in energy, we still haven't even broken out yet, right? Which is hilarious that we're just stuck in this range that we've been in before the 2008 highs. So Spencer Israel, when you were, trying to
I was in diapers, yeah.
When you were trying to meet girls for the first time, right? You were introduced to, the pretty ladies in New Jersey. Energy stocks continued to make new highs into summer of 2008, despite the S&P 500 already peaking in October, Dow peaking in October of the prior year in 07. Financials and home builders had already been getting crushed forever. Those already a Bear Stearns blow up. Energy stocks continued to make new all-time highs before ultimately succumbing to the crash. Obviously, as you can see here, crash just like everything else. But it was the last one to peak. So I remember that vividly, right? And we are still 15 years later, Mr. Israel, we are still not above those highs. Isn't that incredible?
It is remarkable. You thought maybe you were going to get above them and stay above them in what's that, 2015 there, 2014?
Yep. And then you got a oopsie. And then, this is a classic from failed moves come fast moves in the opposite direction. I mean, one of the most epic crashes of all time started from a failed breakout. I mean, just, this is why my second book is going to be called The Art of the Whipsaw, because it's going to be all about finding these failed moves because they can be violent. And one of the things that I've learned over the years, the hard way, of course, is that from failed moves come fast moves, and they tend to last longer than most expect, including myself, who put on the damn trade in the first place. And I just can't hold these trades long enough. And that's
this chart reminds me of the Deere chart. It's how you look at it, right? You could say we're at 18-year support, whatever, 15-year support, or you could say we're right there, baby. Let's just get through it and we're good to go.
Resistance is what we call it, Spencer.
I'm sorry.
That's resistance.
You knew what I meant.
Overhead supply, and we still haven't broken out. Now
Yeah.
let's remind everybody that from big bases, the bigger the base, the higher in space. This is a huge, huge base. This is 15 years and still ticking, right? Who knows how long it's going to take to break out? Could take another 15 years. I have no idea. Look at Newmont Mining. That thing's been sideways like this for 30 years. So, yes. Do I think it's going to happen before the next 15 years? Yes. I think it probably happens next year, but I don't know. Could happen this year. Could never happen. I have no idea, but a breakout above those highs could set the stage for, one of the most unbelievable bull markets in energy that we've ever seen ever. And I think that's on the table. I don't think investors are prepared for it because since we're on this XLE conversation, fun fact, in the S&P 500, you're only getting 4% energy in the S&P 500. In the Dow Jones Industrial Average, you are only getting 3% exposure in energy. And fun fact, Spencer Israel, in the NASDAQ 100, which many say it's the stock market, you're getting 0% energy. So
that's why it's been so good for the last decade plus, right? No energy.
That's right. There's and also the tech part, all that tech that helped too, by the way.
Tech may have helped a little bit. All right. What about, this is a new one for me. This is from Wavy. He always comes to us with fun stuff. FCFS, First Cash Holdings. This is a pawn shop holding company. They operate pawn shops in, where are they? It just says U.S. and Latin America. So okay, whatever. $5 billion company, so nothing to sneeze at there.
No, this thing is an absolute beast. We've talked about this before. This comes up like on our scans because it just keeps making new 52-week highs, and the relative strength is just absurd. I mean, so this is FCFS. And then just look at this. Just look at this base. I mean, it doesn't get better than this. And this is technically, what is it considered? Credit services. When you look at credit services in general, you're going to find names like this. You're going to find interesting names that don't look like the rest of the market and showing a ton more relative strength. Credit services in general. And I mean, just look at that base. I mean, you talk about support and resistance. I mean, when support comes in, doesn't even test prior resistance. I mean, that's evidence of strength right there. And then here you're looking at your resistance, right? Nice big base. I mean, and you're making new all-time highs. So very simply put, if you're above 107, you buy this all day, right? So if you want to do some extension work, you could take the high to the low there. And this is making a lot more sense in terms of where the polarity is coming in. Right? That was the big level there around 38.5. So it looks like the big level here, when you really zoom out, is probably closer to 90. That's more what it looks like to me. So, I mean, you could keep it tighter, tighter stop around 107. I don't have a problem with that. And then
is this a recession play? This is a play. If you think there's going to be a recession, this is what you want to own, right? You want to own a pawn shop. No. This it looks like the stock market, just stronger. What do you mean? We peaked and you're right. No, but I'm saying if there is a recession, in theory, pawn shop business would go up, right? So because not only do they, like their biggest thing is like loans, right? They're predatory, but like that's what they do.
Right? This thing trades with the market.
Yeah, fine.
It doesn't trade inversely to the market. It trades with the market. Yeah, it trades with the market.
The market doesn't have to go down in a recession. Right? So, something to think about. That's all I'm saying.
Okay. I like this. I for sure. Credit services in general, good place to look, by the way.
All right. For like the 5th or 6th time.
Visa and MasterCard are in the credit services business as well, FYI.
Yeah. For the 5th or 6th time, we're being asked about BWXT, the nuclear parts component. I guess is that how you describe it? I think that's pretty much more nuclear manufacturer and service provider, right? So, wow, that's interesting. That chart.
Yeah. So, I mean, that's your level. So, prior uptrend, right? As we know, this is technically it's an industrial, 7 billion at this point. But yeah, like Spencer said, there's something funky with does like nuclear components or something. So it's like a uranium stock, right?
Mm-hmm.
So I mean that 72 and a half level, that's it for me. If this is going to be a breakout, right? Below 72, things get hairy. So you really want to be careful. We're just talking about the implications of a failed move, those fast moves that tend to come. This is certainly potentially set up for a failed move. I'm not saying it is. There's no evidence that it is actually. Everything in general suggests that this relative strength should continue and it should head towards 95. But again, only above 72. Otherwise, it's not valid.
Here's a new one from Sambo 161.8. He's asking to look at the Japanese yen, please. So we haven't talked about a currency on this show, maybe ever. We haven't gotten a request for one. Now we did.
No, I absolutely love it. I absolutely love it. I mean, this is what it's all about, guys. Spencer doesn't give a damn about the Japanese yen. He doesn't care at all, right, Spencer? Tell him you don't care.
There are many things I care about more than the Japanese yen. Put it that way.
So the Japanese yen traditionally is expressed as a denominator, and the US dollar as the numerator, right? So as the line is going up, that is yen going down. And as this line is going down, that is yen going up, right? Make sense? And what we can, so, I mean, the big level here, I mean, this is probably the reason why he's asking, because I mean, you're looking at about, 148 or so, I mean, yeah, 148 to keep it dancing. So 148 on dollar yen. And one thing, we talk about, hey, don't overthink the dollar. Like that's an ongoing joke because what we do a lot is overthink the dollar. If you really want to take that statement and I'll actually agree with it, is don't overthink the dollar yen. Like there is so much shenanigans that goes on to the dollar yen. So to overthink the intermarket implications, because sometimes in history, Spencer, the yen was the most safe asset in the world, right? Like when the Associated Press got hacked on Twitter and they said that there was a bomb and Obama was in the White House and that there was a bomb or something like that. It was like a hack. When that happened, go back and check the tape. You'll see the asset that went up the most on that spike was not gold, was not treasury bonds, it was yen. Go back and check the tape. And because of the unwind, because what institutional investors were doing was they were shorting the yen, taking that cash and buying risk assets. So when money was fleeing risk assets, it would just unwind that trend and they would buy back the yen, which caused demand for yen, right? It was called a yen carry trade. So because of that, so again, you don't necessarily have those such strong correlations today like you did then, which is why I'm always saying correlations do change. So again, specifically with yen, don't overthink the intermarket implications. If you want to trade dollar yen, then you're looking at 148. If you're above 148 on dollar yen, knock yourself out. I mean, if you really want to be in this trade, I think, but you still got to deal with the former highs from last year, which is a little messy. So for me, it's not a trade for me. If you have, like, what's your time horizon? How long are you trying to be long this? You know, if we're below 148, I'll tell you this much. If we're below 148, I like this from the short side.
Isn't the yen carry trade like over now that
it's not what it was. It's not what it was.
The Bank of Japan is at negative rates, right?
Yeah.
So doesn't that mess with?
It's not what it was.
Yeah. Okay. All right. That was fun. Let's go back to the stocks. TOST for Daniel and Jeff. This is
a name that comes up a lot, of course.
Yeah, this is the point of sale technology provider for restaurants.
So the bull case is that this is a big bottom like this, right? And it still has work to do. And the bear case is that this thing is just gone straight down and, you know, breaking uptrends, right? Flirting with key support, right? So here we're looking at TOST, which is a software stock out of Boston, Massachusetts, $8 billion. And I think the number, I think 16 is the number. I think 16 is the number. So if you want to be, if you want to buy this, you're buying weakness. You're buying stocks that are making new 52-week lows for all intents and purposes. So you're not buying relative strength. You're certainly buying weakness. But in a market where you could potentially see rotation this time of year, I do like how momentum's held in there pretty good on a 14-period RSI. No overbought conditions here, but certainly no oversold conditions. And then on the daily chart, you know, you might have a nice little bullish divergence here. All right. Above 16, I don't hate it. I don't hate it above 16. Below 16, you know, short it to 0, right? Above 16, I don't hate it.
Pretty wild. You know, Toast IPO'd, what, I think 2 years ago? I think it was 2021, late 21. And the stock is down, what's that, like 75% from its highs. It's still worth $8 billion as a company. Pretty remarkable. Okay, couple more quick ones. Niche Car wants to short Nvidia. Oh boy.
I love it. Listen, depending on your time horizon, those have been good trades. I mean, I don't necessarily have a, you know, depends on what you're trying to do,
I guess.
So I wanted to show, see if I can do this. I can. All right. See, I'm getting better at this. So, nice. Here's Nvidia. So here's your long-term trend in Nvidia, right? And then your extension level from that, you know, Spencer, you've been working with us, I don't know, a year or so, whatever. You know, you've seen a lot of Fibonacci extensions. I don't know how they did it back in Benzinga, but, you know, with us here, you know, we incorporate that. Did you when you see these levels coming into play, working again and again and again, are you surprised just how useful they are? Because I can't imagine you used them too often before, right?
I mean, I've known about the Fibonacci sequence for quite a while, but I definitely was not a big part of what I looked at. I'm still baffled by it and how it
like. How
seems
about
to
this
work.
Nvidia chart? Does it now that you're familiar? Does it surprise you that that's where Nvidia stopped going up, or is it like, yeah, of course, seen it a million times?
I mean, I've sort of just come to accept it. I don't really understand it. Just like I don't really understand why gaps tend to get filled, but it just sort of happens, right? It's just a thing that happens. So,
Well, that I can explain to you. Well, that's for another day, but that one I got for you.
All right, fine.
Yeah, for sure. So, Nvidia, what's interesting, look at, obviously Nvidia and semiconductors in general move together, right? There's a semiconductor index. And, the question that I like to ask, and, a lot of investors should be asking, and a lot of smart strategists are constantly asking is in what direction are semiconductors going? Because that is a very important sector for the overall market. If you're curious which way the market's going to go, and many of us are, semiconductors should be one of the places that you're focused on, of course. Industrials.
You hope so.
I mean, that's just what it is, right? So, all right, well, if you are wondering the direction of semiconductors, now let's look at its components. What is going to drive semiconductors higher? Well, Nvidia, the biggest component, is certainly going to be one of those. Right now, of the semiconductor index, Nvidia is 20%, believe it or not. Nvidia currently sitting at $1 trillion in market capitalization. That doesn't get you out of bed in the morning. I don't know what will. And notice that Nvidia is already above those former highs from late 21. And semiconductors are struggling with that. The fact that Nvidia already has, very impressive. Number one, shows relative strength out of Nvidia, no question. And number two, is evidence that semiconductors breaking out to new all-time highs is not unprecedented. Its largest component has already been doing that. So a breakout above 500 from a longer-term perspective, I think, could set the stage for a run to 750, and a $1.5 trillion market capitalization, 1.6, 1.7, I think it gets it to. But in the meantime, you're in the lower end of this range, right? You're right in the lower end of this range, right around here, right at 400. And I think you buy it with a trade back up to 500. It's still going to be in that range. So I don't necessarily think that we're going to rip through 500 like it's not there. We could, but I think it's going to be a little more challenging than that. But a trade from 400 to 500, I got no problem with that. I really like it above 500. A trade from 400 to 500, I don't hate it. But I really, really rather be below 400. You can't touch it.
Yeah.
But I'd really rather own it above 500.
All right, that'll be a good place for us to stop today. I know we did not get to all the questions. You'll just have to come back on Thursday when we do this show again, because we do this show twice a week, every Tuesday, every Thursday, 1 p.m. Eastern time. Thank you to all the requests we got in the chat and via email. You should definitely email your requests for us now so I can write them down and start with those on Thursday's show. And we'll see you guys there. Have a good rest of your day. Thanks for watching.
Adios.